Hi everyone, welcome back to the Market Chat. My name is Richard Moglen. Joining us today is Christian Fromhertz, who is the head trader and CEO over at the Tribeca Trade Group and also one of the top performers in the 2021 U.S. Investing Championship in the Enhanced Growth Division. Christian, thanks so much for taking the time and speaking with me today. Welcome to the show.
Yes, hi. Great to be here. Very happy to be on your webcast and your show. So very much looking forward to it.
Perfect. And to start things off, I always like to hear about how people got started and hear about their trading backgrounds, how they first got interested in the market. So yeah, run me through when you started trading and kind of your journey up to this point.
Yeah, well, this will kind of date myself a little bit, but yeah, I've been involved in the markets for a long time. I really started way back in like 1999, and started out as a financial advisor. They were just starting to call them financial advisors, and it was a really interesting time to start off in the markets. And it's just funny when you kind of look back at the some of the things that have occurred over the last 20 years. You certainly have seen a lot of different market cycles, and it's funny how all of a sudden we're starting to hear about, with what we're seeing in this move in growth, a lot of like 2000 and 2001 being quoted. And,
Right.
it's funny, a few years ago, you never heard people kind of quote that, or just, some of the perma bears out there maybe saying, hey, this might happen or that might happen. But it seems like it's being quoted a lot more. And there's a lot more charts being thrown around saying, hey, look at what happened here. And, are we kind of in the progression of a move down after what we saw in 1999 and 2000? But yes, that's where I started my career, and I actually started off. Yeah, it was basically essentially a stockbroker, but they called them financial advisors, and I did that for a couple of years. And that was my first job out of college. It was a very, very interesting job, and it was really good for me at the time because I was a little bit more shy coming out of college and thrown right into a sales job where it was heavy cold calling, probably something that they don't even do that more these days. And that's how you earned your client base. It wasn't like you were just handed a book. But really what interested me was the markets, not so much
Right.
the sales. So I kind of changed gears for a number of years, fell out of trading for a couple of years just to get myself on track. And I worked my way through up through another company, because I was originally at a company that you never hear anymore called Dean Witter, which was bought by Morgan Stanley. And then I moved over to Merrill Lynch and kind of worked my way through Merrill Lynch, because it's very difficult to start on a trading desk. Might actually be a little bit easier nowadays because of what's going on with working at home and COVID. But, unless unless you start from a really, awesome school, it's going to be very difficult to start right off the bat in trading. So I worked my way up. Was a junior trader for a couple of years, and worked all the way through at Merrill Lynch Institutional Trading, to where I was basically like a senior trader director, and that was on their Delta One desk, which was really nice because a Delta One desk, probably hear Delta One a lot, and I always get questions. Well, what exactly does that mean? Well, it's really no optionality. So it's trading a lot of different products. Every once in a while, you'll hear something get blown up on a Delta One desk, like we heard like a year or so ago with equity swaps,
Right.
which allow investors to get leverage. They also allow investors to kind of create customized indices. So I really kind of got my start in trading with being able to trade a lot of different products, and really ETFs were just kind of born around there, and that became more and more popular. So we kind of split our ETF desk away from our Delta One desk, and I went in that direction. At the same time, we were going through, after I had done that for probably about 3 or 4 years, then the financial crisis hit. So that was another, another lesson in trading and investing, because that was really once that hit, that was a prolonged downturn.
Right.
Seemed to last for quite a long time. By the time that was over with, and the market turned back up, people were just not enthusiastic about either investing, trading. People didn't really want to, but at that time, there's no one really left to buy the dip. A lot of people lost their job in the financial industry. I was lucky enough to make it through. And then, Merrill Lynch was basically gone, and we were very lucky. We were bought out by Bank of America. That relationship became Bank of America Merrill Lynch, and I worked for them for a number of years under the ETF trading desk that they had. So it was a great career. It was great to have that. It's great to have that background as an institutional trader. I think things have kind of changed a little bit on the institutional side. Things really have, from that point, the institutions had such more of an advantage over retail traders. And I think over the last few years, that has really changed a lot. I was used to trading on very complicated, complex and complicated trading systems, a lot of, algorithm trading. I had, a whole dashboard of where I could send an order to, and how I could basically work an order. That is still the kind of the same as far as the institutions, but as far as, the trading platforms, they're a lot better than they used to. So when I decided to kind of leave the institutional world and work on the retail side for myself, I was very happy with kind of the way that trading platforms have evolved, because I really couldn't trade anything personally when I was at Merrill Lynch or Bank of America Merrill Lynch. They don't allow personal trading. Holding periods have to be at least 30 days. But, I think at this point, from what I've seen and how it changed over the years, I think the retail investor has really kind of caught up. And I think that's reflective in what we've seen in terms of hedge fund performance last year versus the overall market. It's just because there's a little bit of an informational advantage, maybe not so much as definitely not as much as there used to be. It's still very difficult, to beat the market year after year. And, the hedge fund performance was just, I couldn't believe just how few or how little funds actually beat the S&P, and how difficult it was last year.
Perfect. Yeah. And I'd love to hear more about kind of how your institutional trading background has kind of influenced your current trading style, and if you incorporate any of the lessons or experiences you learned trading those instruments, and basically how you incorporate that today.
Yeah, I mean, it's a lot of background.
Yeah.
Really being an ETF trader, kind of, we were trading all different types of markets, not only U.S. equities, but we were trading international. We also were trading commodities, because ETFs touch basically every area of the market. So it really kind of, if someone wanted to come in and trade, a lot, if they wanted to put a huge trade on in Japan, they were using either EWJ or DXJ, and you had to learn how those markets worked, what the trading hours was of that market, the FX. So just really kind of the curiosity to say, okay, well, I've never traded this country before. Let's figure it out. Or a big emerging market ETF, China ETFs, right? We had to make markets in those at like 6:30, 7 o'clock in the morning. So we had to be able to kind of know how to convert that price. So really just, being able to kind of pivot to one market to another is a little bit how I conduct things now. I don't trade nearly as much like international, but with the sector rotations that we're seeing in this market, and just what we've seen over the last 6 months, but even so more so over the last month or two, just kind of allows me to pivot to one area of the market. And it's been, I think, for growth investors, if you're just pegged to being a growth investor, you've had a difficult time over the last year. Some times of last year were really good if you were a growth investor, but not every month, and certainly not the last couple weeks. So being able to kind of say, okay, well, if that's not the hot area of the market right now, let me switch over, to something else. So that helped me, and just, because it was really uncomfortable when I started to say, hey, you've got to learn this, this area of the market, or, hey, somebody wants to do a big GLD order, big gold, order. How are you going to do that? So you had to put those pieces of the puzzle together to be able to execute properly. And it's kind of what the market is kind of throwing everything at us right now. To be a profitable trader, it is not easy.
Right.
And then it comes down to risk as well. Mainly as an execution broker, as a risk broker like that, where you're making big block trades for institutions, you have to know how to handle risk. And it's different institutionally versus retail, because I'm certainly not making markets for a hedge fund. But at the same time, when something goes, not the way that you expect, you got to be able to pivot and react quickly. This market, again, I keep referring to just what we saw last week, because it was pretty spectacular.
Yeah.
The price action, to the downside, you could kind of go get a cup of coffee and come back, and all of a sudden something is down, just not just 3 or 4%, but could be 8-10%, no problem.
For sure. And I'd love to hear more about any specific lessons that you've learned during your trading career. And often they line up with maybe big losses or something like that, unfortunately. But yeah, anything that really stands out in terms of big lessons that you've learned that maybe a newer trader watching this might be able to learn from your experience.
Yeah, sure. And I mean, I was lucky. I had a great, it was one of the best experiences to be on an institutional trading desk. For a while, like our desk was only 3 or 4 people, and then it grew to like 8 people. But just the team, the team atmosphere, and everybody kind of looking to kind of help each other, because the P&L wasn't just tied to one person; it was tied to a team. But
Right.
one of the things that I learned right away is that when you make a mistake, it's okay. Everybody makes mistakes. And you hear that a lot, on Wall Street, as well as on Twitter, about, hey, if it's okay to be wrong but not stay wrong. And
Hmm.
the amount of risk that we were handling, you did not want to stay wrong. And as soon as you had a mistake, the best thing that you could do, and I learned this from the guy that I sat behind for a little while, was, hey, go tell the head of the desk, tell him what happened, and let's fix it. And if you did that, it was not that big of a situation.
Hmm.
What was a big situation is if you didn't tell anyone for a couple hours, or if you decided to trade out of it without really telling anybody. That was worse than than actually the mistake itself. So I learned that very quickly. And it's the same thing, I think, with how I'm trading now, is that you just have to realize that you're human and you're going to make mistakes. It doesn't matter what level you are. So
Hmm.
you have to be able to, number one, realize it, and just get out of the mistake, and just say, hey, it's a part of doing business. And number two, it's this business can really take an emotional toll on yourself. It's not an easy business when things are not going the right way, and you really have to let things kind of just roll off your back, and realize, hey, you're going to have a bad day. I had a ridiculously bad first week of January, and I just realized that for as long as I've been doing this, I was kind of like, hey, you're making mistakes that you made, like when you first started trading. But you know what? It's the first week of the year, and you just realize, like, these things happen. Let's
Right.
take a step away, and, like, realize that, hey, this may be the best thing to happen in the beginning of the year, and this way you just don't do this again for the rest of the year, and you should be fine.
There you go. There you go. And I'd love to hear, outside of learning from the other traders on your desk, were there any particular resources or books that you found really helpful and taught you about a bunch of lessons, basically?
Yeah, I mean, there's so many resources. Like, your market chats are awesome. In terms of, you meet with experienced traders from just various different backgrounds. And what I like is sometimes there's similar themes
Right.
into what people are talking about, and you kind of catch that. The more that you watch your market chats, you pick up on what some of these really good traders, what they have in common,
Hmm.
even though they may actually have completely different indicators that they use, or a different system that they use. But there's a lot of commonalities in terms of how they're approaching what they do on a day-to-day basis. They're serious, and they really take this not so much as a trader, but also as a risk manager. You
Right.
hear that in your market talks quite a bit, that you have to be a really good risk manager at this if you're going to be successful over time. Books, I would say, are another great resource. You could really learn a lot of lessons. One of the first books that really kind of helped me, because I did kind of convert over the years to more of a trend trader, and a couple easy books to read there, which I find very interesting, is the Turtle Traders book. Is really
Yeah.
is a nice entertaining book to read, but you'll get a lot information about that. I mean, that's essentially about taking people who are not traders and giving them a system to follow and seeing if they could be a profitable trader. So that was very much, I think it has some similarities with the movie Trading Places, and I think that's
Yep.
how they got the idea somewhat. But that's a great one to read, especially if you haven't been a trader before and you're like, hey, I'm never going to be able to do this. Well, it's a great, easy to read book about that. Trend Following by Covell is another one too that is just very solid for me. The
Hmm.
Mark Minervini books are really good, really great about discipline and money management. There's the interview that I think you had with Stan.
Stan Weinstein. Yep.
Yeah, great book there. I feel like I'm forgetting a couple of the Market Wizards books, but
Yeah.
again, that's the beautiful thing about if you want to learn, these books are out here and they're just solid. And there's
Yeah.
so many other ones out there too. The Candlesticks books is a really good one too. I forget the name of it, but I think I actually have it over here. I think it's the
Yeah.
Martin Pring book. But yeah, there's so many great technical analysis books out there. But those are a few that I find really interesting. I wanted to ask you a question too. How long have you been doing these market chats?
Sure. So I think I started in late or maybe early 2020. My first one was with Ben Bennett. Everybody watching probably knows him as at Pattern Profits on Twitter. He was nice enough to let some unknown person interview him for an hour, so that was really special. Yeah, we were chatting a little bit earlier about these interviews, and I'm kind of trying to do what Jack Schweiger is doing with the Market Wizards, which is kind of ask, as you said, a bunch of traders these questions and try to find the similarities between the ones who are successful. And like you said, a lot of it comes down to managing risk, having a systematic process, and yeah, just having a consistent system that allows them to focus on the highest potential stocks for their particular system. And that looks different for different traders. Some people focus on base breakouts. Some people are buying pullbacks. But there are all those similarities, not just in how they manage risk, but also in their weekend routines, daily routines, that type of thing, which I really like to hear about. And I want to throw something back at you. You mentioned focusing on risk, so I'd love to just hear kind of, first of all, how do you define risk, and also what are some steps that you take to manage it in your trading process?
Yeah, really being thorough with your process. So risk is just how much money that you've got out there, and also you could look at it a couple different ways. It's also how much you have in one particular position,
Yeah.
how much you have in any particular sector. Right. I think that was probably a big thing that hurt people in 2021 was how much do you have in the software space, how much do you have
Right.
in high growth, right? So that's definitely a measure of risk too. There's a little bit about diversification, and you don't need to be fully diversified as a trader, but you need to know how much that you have in case there is all of a sudden there's a rotation out of one particular area. And it doesn't have to be what we've seen over the last month or so with high growth. It could be for a while all the low volatility names, the consumer staples, the utilities just a couple of weeks ago were really strong. But you want to be careful with that too,
Hmm.
because those are going to get stretched too. So you have to be cognizant of how much exposure you have in a group, also how many positions that you can manage well. There's only so many positions that you can really, unless you've got a team of 3 or 4 people behind you, which I think most people don't. You really have to be aware of, how many positions can you really do a great job at managing, especially, it's great when the market is kind of doing what you want it to do with those positions. But if we see a hiccup and it's something that you're not expecting, the more positions you have on, sometimes it's the more problems that you have on. So that's a couple ways that I define it. What I like to do as well, something that has kind of that I've I don't want to say developed over the years because it's pretty easy, but just always making sure that you're thorough with what you're doing.
Right.
It's nice with these computer systems, how they kind of just let you scale, so that you can have a few, more than even a few positions on. But as long as you've got alerts placed, right, as you've got some targets out, and that's a big thing with, planning out your trade before you actually put the trade on. But you should be doing that, in my opinion, every time. You should be thinking about, okay, what are you expecting out of this, and where am I going to start taking the trade off while even the market's closed, or before you even definitely before you even get into the trade. But not only taking the targets, but also this is the boring and methodical part of trading, is every time you get into a position, put a downside alert. I don't use hard stops. I get the question all the time, oh, this went through a stop price and you didn't execute it here. Well, those are just soft stops. There's a lot of things that could decide whether or not I take that, that downside alert. Depends on what time of the day it is. It depends on, if we've got some major volatility for that day, or if things are calm. So there's a lot of factors, but at the very least, putting an alert on something so that your eyes don't always have to be on that chart, or don't have to be on that position. You can get a heads up to say, hey, this isn't working out the way you thought it was. So that's one of the easiest things that you could do, but it's also one of the hardest things to do, because no one wants to really think about, when they put on a new position, that it's going to go the wrong way right away. But if you don't do that, you're going to have a lot of surprises, and they're not going to be good surprises, unfortunately.
Yeah. And I think every one of the traders who I've talked to really emphasize that you have to protect your downside. You have to think about your downside almost first, and focus on that, and focus on managing that risk. And Christian, I wanted to pivot a little bit, because obviously you competed in the U.S. Investing Championship for 2021, did very well in the enhanced growth division, which is, I believe, stocks and or options, or it could just be options. I'd love to hear just overall about your general experience competing, and also how the year went overall for you.
Yeah, it's funny, is I didn't know anything about the contest. I didn't know that I was actually like hoping that there was one out there, because, I think it's a great way to compete. If
Right.
you don't have to necessarily enter to win. And I'm really not in it. This is horrible to say, but I'm really not in it to win it. I'm just in there to kind of compete. And it's nice to say that you participated in it. And, I do have a goal, but my goal is not, I'm not going to trade, super, super leveraged. And I listened to the Mark Minervini interview, which was really interesting about, I think he's the winner for last year. And, in your interview, you kind of got him to say that, hey, how are you doing it, basically, which I was pretty interested, but he's using a lot of leverage, right? And he's using, he's in and out of trades very quickly. So
Mhm.
I think that that's really, of course you have to be very good, and, you have to be awesome at what you're doing. But I think that's kind of the winning formula to possibly win that contest. I'm just kind of looking to kind of play my game. I don't want to use all kinds of crazy leverage. And hopefully my system will work. And I look to be, top 5 is a great place to be in these contests. So that's kind of where, or even top 10, pleases me. But it's really not so much about a number. It's just, hey, following my system. And
Yeah.
as long as I'm doing that and disciplined, then I'm confident that things will kind of work out for me.
Yeah. Just trading your style. I like that.
Yeah, and then I
Yeah.
think the second question you had was, the enhanced division.
Yeah.
I'm mainly trading stock. I mean, that's something over the years, and I think it's really good for younger traders to kind of realize that, you hear about options and option flow and so forth, and no one really tells you how difficult outright trading options is. It's extremely difficult, and I tried to do that for a couple years as a retail trader, and I'll share the experience because I think it's really good for younger traders who think, oh, this option trading is going to be awesome for me, and I'll be able to, make money very quickly because it's leverage and so forth. But in each trade, you have to get two things right. You got to get the direction right, and you got to get the timing right. So do you know how difficult it is just to get the first thing right, just to get the to get the direction right, let alone the timing? If you look at the best of the best investors and hedge funds out there, they can't get those two things right. So you think you're going to be able to consistently get those two things right all the time? So I think options are they're good for certain uses, and they're a great tool in the toolbox, especially for playing some of the real high flyers, and you're just looking to kind of exploit, maybe a small move. Call spreads are great. Maybe even selling some premium in the right places works too. For lower volatility names, options are work out pretty well for taking on a little bit of leverage. But to consistently just trade options, it's great when the market is with you, but if the market, you don't even need to have a correction. If the market just starts to kind of go sideways or range bound, you're going to lose, right? Because of the time decay. And if the VIX happens to go down in that situation too, now you're losing money on both the time decay and because of the VIX crush too. So, it's not an easy game. And it definitely takes some time and more time to kind of understand that than just being a stock trader.
And are there any resources or books that you would kind of recommend for traders who are interested in learning more about how to use how to use basically options as a tool in their trading?
I'll have to come back to you about a specific
Yeah.
book, but I think just any basic option book where you can learn about, how just the major components of option pricing. You don't need to memorize like the Black-Scholes formula. I took a couple levels of the CFA exam where they make you actually, know how that works and be able to kind of calculate it to some extent. But just the basic understandings of what the option pricing is. And also, what is really important is how to trade stock with options. There's too many traders who are just flipping around options, buying and selling them, and they don't know how to hedge them with stock. And as we get to earnings season, and if you're positioning a little bit in options, whether it's call spreads or some other way, and you've got a big move pre-market, whether it's a name announces after 4 o'clock and you got to wait till 9:30 to sell that option, forget about it. There's so many things that could happen. They could give back the whole move on the earnings call. So if you know that if you're long a call and you can hedge some of that, or hedge yourself out completely with the stock position, is very important. So if whatever option book you do read, make sure it has a little bit about dollar hedging and a little bit about gamma as well.
Perfect. And getting back a little bit to the championship in 2021, what was it like maybe having that added pressure of everybody kind of seeing your results every month or when they were reported? Did that add any pressure on you, and how did you basically handle that added pressure?
It did, so I first learned about the contest like midway through
Right.
2020, and I was too late to enter the contest in 2020, which I was like, oh man, that's unfortunate. But I did enter it for 2021, and yeah, the first couple months I kind of psyched myself out a little bit, at least for the first month, and I just kind of realized that, hey, go back to what you go back to what you're comfortable with. It's very important to stay in your lane, in terms of what you're comfortable with. If you start to get out of that lane and you start doing different things and you start chasing performance, you will find that you will make a lot of mistakes doing that. That happens to me, like increasing position size, something where I'm not comfortable. What you'll find is you'll get bumped out of a trade that you should probably would have been fine staying in,
Right.
if you sized it up appropriately. So the goal, of course, for a lot of traders, and this is not a shocker, is to make money, but you have to do it in a way that you're comfortable with doing it, and a way that you can be consistent. So it takes a little while to realize that if you're always looking at your P&L for the day, your results just may not match what you want to do, and realizing that, continue to kind of trade the market in front of you, and the money will follow after that. Again, it's something that comes with experience. It's not something that you could just, right off the bat, you're going to say, oh, um, I'm going to be able to kind of pick this up and not worry about my P&L. But a system takes time to develop. And I think if you're just starting out and you've been around this, I think 2021 was actually a much better year for you to start versus 2020. Too many bad things, too many bad habits were picked up. And it was great to see so many younger investors come into the game in 2020. And I think for a while the market was really lacking that. You just couldn't get younger traders or just younger people interested in the market. So it was great to see that happen. But and this happened to me when I started my career too. It happens to everybody, where all of a sudden it's a little bit too easy to make money. And things are just running too smoothly. So I think last year was a much better year for experience wise, to kind of pick up some lessons, and if this is something that you look to do for a while, you're not, when the market just goes straight up like it did for a little bit in 2020, you're not going to learn anything, right? You're not going to become better as a trader. So I think last year, and I told, traders in my group, I said, hey, this is really where you kind of, if you're young in what you're doing and have a long time horizon, this is a great year for you. We had a little bit of everything in 2021. So, really a lot of takeaways that you can kind of pick up from that. And that'll kind of help you position as a trader going forward.
Absolutely. Yeah. 2020 probably cleaned up a lot of messes that maybe would have been, would have been pretty bad mistakes in a year like 2021, where stuff recovered well and all of that. And yeah, like you said, it can form some bad habits that take some time to unlearn. I'd love to hear kind of how you handled overall 2021, because like we've talked about, it was a little bit of a choppier environment. Growth stocks had a lot of failed breakouts, especially after the February timeframe. We went in kind of almost a bear market in growth. So could you kind of talk me through the year in general, and maybe you want to bring up a chart of an index just for a reference point?
Yeah, sure. So let's do that. Let's share the screen. So let me just bring this over here. Yeah. So I think a couple things. And I think just another lesson too is to realize, I often get the question sometimes from someone who's just starting out trading, and they say, hey, I want to make like X amount of money a day. And I basically say, well, that's great that you want to do that. You want to earn a certain amount a day, but that's not realistic in terms of trading. It's going to come in bunches, right? The market is going to be very good for your system, some days, some weeks, some months, and you're going to find that you're going to really make money in bunches. And then when the market is not constructive for you, then the goal is really to not give much of that money back. Now, I know that's easier said than done, but trying to force trades in a market that is not cooperating really is where you want to kind of get to as a trader, to try to avoid excess trading when the market is doing something. So for example, if you're playing, I do play most things on the long side. There were years when I did a lot more shorting. I actually feel like I wish I was shorting more last week because the moves were pretty fast to the downside. And in my group, there was traders who were certainly exploiting things to the downside, but it's difficult. It's difficult to kind of flip back and forth. And again, it comes down to your personal style. If you're really good doing that, then then go for it and continue to do what works. But I find sometimes that I just need to kind of stay in the direction that I am, just so that I can kind of spot things and it's a little bit more comfortable for me. So unless we really start to kind of go the other direction, and really kind of get below the 50-day moving average in the S&P, you'll probably see me, and the VIX would go back above, let's say 25, and even worse, 30, then you'll probably see me stay grounded, playing more on the long side and using puts and things like that to hedge a little bit. But yeah, I mean, there was various times where, we were trending, and I looked at, last year in terms of what the S&P was doing was basically just, just kind of sticking with the trend when there is one, and then being patient on those pullbacks. I even said, like, my goal was, I don't even, know what percentage it was at, just to kind of start the year, but I realized it wasn't going to be attainable. And I brought that percentage down just in terms of like end of year goal. And once we kind of, I was surprised at what happened. I've got the center of this screen is right around, August and October, but we had such a really nice run in the middle of October, until about we got to that Thanksgiving week. So this was really a wonderful month for me, following this trend and kind of staying with it. Even though the market breadth, I think, was kind of deteriorating along the way, I thought that there was plenty of opportunities. If we go back to the beginning of the year, I'm trying to add some, I'll certainly, come up with maybe some more examples that we're seeing right now. But going back to the beginning of the year, it's funny because you don't see that much volatility on the S&P, but we certainly saw things, and maybe looking at like an ARK chart might kind of bring it a little bit more pronounced. But, basically in here, right, was where we kind of pulled back, right, when we made a high. I think people's expectations at this point were that the market was just going to continue to do this, continue to kind of move higher. I think people were really getting overconfident in the beginning of the year, the way that 2020 ended up very, very strong. And the first part of January was very strong too. But this really kind of shook things up a little bit, and if we look at, this is just the NASDAQ, but I think if we look at ARK going back, there was a lot of people who, I think, and here is exactly what I'm referring to, just much more pronounced, right? So realizing when things broke down, right, like this, I think was a pretty good lesson. People really kind of got caught too far on the long side, speculating on too many things that, on one end of the spectrum. And I get it. Those were the things that were working up until then. So to see this, right, and to kind of see this play out, right, in so many names, right, and we could look at any of these names, which I just think is kind of interesting at this point, but so many names kind of peaked out, right, like a Teladoc, and just never returned. So, sticking to like a trend trading, so one of the things, like, I know this is not like an awesome trade to really talk about, but what really helped me, I think, kind of stay alive and outperforming so much for 2021 was just not getting involved in any of this stuff once it broke trend. I realized this because I've been trading a trend type following system for a while, that as soon as these names started to break down, there really wasn't much for me to do. So you can actually like just gray out all these charts. Not to say that I played all these things to the upside and made a ton of money on them, but just getting out of the way and letting the price go other places. And we saw throughout the year like a deterioration in breadth, especially on the NASDAQ side, and much of it was because of stocks like this that just once they broke, they stayed broken. So that's, I think, one of the big takeaways is, just sticking with things that kind of just kept on working, right? A big stock for me last year. And then I did lose money on this and made a bad judgment on November, but I just kept on rolling profits in this INMD. This was a wonderful stock for me last year because the trend, and this is kind of what I look for, and I'll go over some of the indicators on my charts in a minute as we get to maybe some of the charts to kind of look at in the present day. Sure. But what I love to see is just, moves back into support over and over and over.
Hmm.
And certainly this name did this through the course of 2021. So, it seemed like for every teledoc or what's another docu that kind of
Yeah.
broke down, or, even the,
PLTR. Yeah.
yeah, or even like the clean energy stocks,
Yeah.
which, were a nightmare, in terms of, there was so much participation in these stocks towards the end of 2020. You could just find there, people were trading 20 or 30 of these things, right? Which it was just any clean energy name, whether it be electronic vehicle, whether it be, something that was involved in, um, hydrogen, any of these things just really took
Yeah.
off and were great. But once they started to break, they just never had the real momentum to them, again. So, some things simple like the 50-day moving average, right? You didn't
Right.
have to get very, I've got a couple fancy indicators on my charts. As you can see, I've got lines all over the place, but, you know, a simple trading system, staying out of things below the 50-day moving average kept you out of all this mess,
Right.
basically. But yeah, INMD was a great stock. I hope that this stock will eventually come back, because it's still, they still have great fundamentals. Whoops.
I think you misspelled it. Just yeah.
INMD.
Yeah. There you go.
There we go. Yeah, I mean, this was a wonderful name to kind of, play, and this is, I think, one that I maybe did play in options. Options do give you the ability to kind of keep rolling a trade along, right?
Hmm.
Where you can basically, if you're in, let's say, calls out a couple months, right, and maybe the call price, I'm just making up numbers, but maybe you got into a call that cost you, $7 or $8, and, you could kind of trade that or take profits when it basically, as this thing was trending, going from 10 to 11,
Hmm.
and then taking the profits out of that one and going back to, rolling it out to a further expiration, higher up strike, right? And, keeping that skin in the game to kind of let yourself, roll with those profits, right? And that's one of the things too in trading, that you've got to be able to find some names that you're going to, make outsized profits, and, and trending markets like something like this certainly helped.
Absolutely. And just taking a step back quickly,
Yeah.
could you talk about just a little bit your overall kind of time frame strategy, that type of thing? Because I think for people watching, it's very helpful to kind of get a sense of how you trade, and maybe they'll pick something up if they really like to trade that way as well. And also if you have a sense of kind of your batting average, average gain, average loss, average holding period, average holding period for a loss or a win. I think that's helpful for people to know as well.
Yeah. So I love to swing trade stocks. Just the environment has to be right for it.
Right.
Something like this, where we've got defined trends, just sets up really well for, for swing trading. Now, if the market changes, you'll find that I will day trade a little bit more. But, I'm mainly a swing trader, and really what I like to be doing is holding positions, for a couple days to a couple weeks on average.
Hmm.
As the year kind of changed a bit in 2021, I was doing a lot of swing trades that were just mainly a couple days.
Yeah.
And then just seeing if that trade worked for a little while. And, it wasn't by design. So really the market kind of dictates how I'll trade. The more defined trade we are, the more of a swing trader I'll stay. The more erratic kind of market that we have, and where volatility is over 20, you'll find me doing a lot more. You'll find me doing a lot more day trading. So, there's different strategies for the two of them, but, yeah. So I can't really define, and, I've had traders that are in my group ask me, they're like, hey, how come you're getting in and out of positions so quickly? I'm like, hey, it's just the market changing directions, right?
Right.
So as the market changes, it's important to kind of learn strategies, but realize where in the time where it's the right environment for that strategy, where it's not, and that takes a little bit of experience and just, being in there to trade. So it's very important, for that. So, in terms of risk parameters, I would say that I try to really not risk more than 1 to 2% capital,
Hmm.
and that's by using thinking about your stop and how much you could lose in a position. But it depends a bit on the volatility of the name, right?
Right.
We've seen moves like this, you know, over the last few months, right? You have to be trading a bigger notional size in a Coca-Cola, for example,
Right.
that just moved. I mean, you look at the chart and you're like, wow, that's a big breakout. Well, it's only really 57 to $60. you
Yeah.
know so you really have to, like, that's where options can help, because if it's just the same dollar amount, you're going to find that it's very different than trading a software name, right? So you have to kind of make sure that you're looking at what's known as average true range,
Right.
or the volatility of a name, so that if you do get a move like this, you've sized it appropriately. And I think that was kind of a little bit difficult the last couple months, where we saw this big move in names that were low volatility name, by definition, right?
Yeah.
Low volatility names. So you've got to do something a little bit different if you were going to earn the same amount of money. But yeah, I mean, this market has really kind of changed around a little bit. Do you want to go over some charts that were kind of interesting now, or?
Yeah, I'd love to, but I have just a few more questions just to
Yeah.
kind of set the stage. First, we've talked mostly about charts and technical analysis and approaching things that way. I'd love to hear if you pair any fundamental analysis with that, and also how just in general you find your ideas, and what's kind of your process for identifying kind of what stocks you're willing to trade.
Yeah, so I try to keep the universe very large, right?
Yeah.
I don't really want to discriminate on one group or another. I
Right.
want to kind of keep it open, like an open playing field, in terms of trying to basically look at a chart and like almost like cover up the symbol and say, okay, is this something that looks pretty good or constructive? Because at the end of the day, I'm much more of a technical trader. Fundamentals do come into the picture, and I think even now you have to have a little bit of a fundamental understanding of what's going on, right?
Hmm.
The last couple of years, who was talking about PE ratios? Right now, all of a sudden, we're talking about like what the multiple is on the stock. You
Right.
probably heard like the last couple of years about price to sales, right? That multiple, but that got crazy for a while. Things were trading price to sales 20, 30, 40. So if you were thinking that way in 2020, or in different parts of 2021, like what the PE ratio was, that wasn't going to help you at all.
Right.
So now it's a little bit different. Now I think people are looking at those, which is a good thing. I think you do want to have a mix of fundamental and technical, but I would say I'm probably like 70% technical,
Hmm.
30% fundamental, just as background and understanding, so that the technical trades that I am taking, I want to have that background, and ultimately, the fundamentals of a company. I do believe in kind of knowing what the company does, and knowing whether they have a competitive advantage, whether they have a moat.
Right.
Those things are important. We do want to find names that are going to be difference makers over time. Like, so, you know, those really are things that I look at for the long term, but you kind of have to, that's the beauty of technicals. You put those fundamental setups in the chart, and decide if that's the right market for it. Because,
Right.
I think, what I try to tell people too, Amazon was a huge name for me back in 2020,
Hmm.
right? Because it was trending. And I used to get requests, after this move back in 2020, from March to basically June or July. I had a really good run with this. I was using call spreads, and I kept
Hmm.
rolling the calls, weekly, bi-week, going out a couple weeks in call spreads, putting on like a very low dollar amount, and then like a $10 wide or $20 wide call spread, like $3, $4, and then maxing it out. So I was taking the trade off for like around $8 while this name was trending, was awesome.
Hmm.
right? And everybody uses Amazon, and it's now, I think it's, well, I don't want to kind of come to the conclusion here, but it's probably, it's an overcrowded trade. Everybody kind of has the same opinion on it. But for a while, when it went sideways, right, people got very frustrated. And I got, I take chart requests all the time
Yeah.
at the Tribeca Trade Group, and people kept asking me, like, "What do you think of Amazon? What do you think of Amazon?" I'm like, "Well, it's really range bound. So, if your time frame is a long time frame, that's fine. And if you're an investor, you could sit in sideways action because you have a fundamental view on the company. But it's very important to distinguish whether or not, like, it's great. I use Amazon. I use Amazon Prime. I use Amazon Music, but that doesn't mean that the stock is going to do very well. It's just because I use the products and I like it. And I think they're extremely convenient. The technicals have to match with what my fundamental view is. Another
Absolutely.
thing that I say all the time, and you could see it's had a couple times, it kind of teased us. And I'm like, here, we got the breakout, and then it gave it right back.
Right.
And then earnings was a mess. Um, and that's really too where, to kind of further answer your question, fundamentals really kind of come into the picture for me for earnings, right?
Hmm.
I love when a name does something different on earnings, right? A lot of people call them like earnings power moves or earnings
Yeah.
gaps, right? A name can completely change characteristics on a really good earnings report, right? So you could almost forget what it's done previously. I love it when a name gaps up and the institutions are forced to start buying it because they're under positioned in the name.
Right.
It could really be a great trade for, a couple of weeks, and we've got earnings season coming up. So that's going to be exciting too, because we're probably going to get a whole new set of names
Right.
that are hopefully are going to beat and raise, and institutions will probably be a little bit under positioned, and then they'll have to start buying after they've reported, right? That's going to change the dynamics and the technical setup in that name completely. But we saw it happen on the other way with Amazon, and the expectations were just too high for the stock. And since then, it's been a mess. And it's actually leaning to the downside, the first time that it's really been underneath this. So again, you have to be able to say, okay, well, I like this name. Let's take a look at it. Let's analyze it. But I'm certainly not going to just, trade it just because I think it's a great company. Will I
Right.
have alerts on it, and will I be watching for it to reveal itself in a strong technical manner? Absolutely. But there's
Hmm.
no reason to just say, oh, this is a great company and they should be trading here, right? Or, oh, the analysts don't know, they're wrong on this stock. It's the worst thing. Some of the worst things that I've heard is, oh, the street is wrong on this, right? The market is always right. You're just not an insider in the company. The only people who really know what's going on is the insiders, and some of them don't know half the time. So,
Yeah.
you're just not going to be able to gather all the information that's out there, and the price is absolutely, in my opinion, going to tell you.
Absolutely. And just to pick up on something you said about the earnings gaps, based on kind of your background, can you kind of tell us kind of your interpretation of what happens when funds and institutions are basically under owned in a position in a name, and obviously they've got catalysts and great earnings report, and basically they have to buy, and often that creates that nice trend afterwards. So yeah, I'd love to hear your take on kind of earnings gaps and the opportunities that they provide.
Yeah, I mean, I think, years ago, what I would say when, I was doing more of playing the event for
Yeah.
earnings, kind of looking the implied move is on, which is important, the implied move on earnings, what the market makers are implying. A lot of times they will do that based on the historic move of the name on earnings. So, you could go through, and I look at this on Bloomberg. I'll look at, the last 10 quarters, and I do think that there is something to a name that consistently knows how to manage their earnings and their earnings call. You will find that some companies just, out of the last, let's say 6 or 7 quarters, they've gone up 4 times out of the 6 times, right? They know what they're doing. There's other, names that they're just erratic. They've gone up 2 times, they've gone down 3 times on earnings. So those names I try to, like, not so much stay away from. But yeah, I mean, I'm not really going to look for an earnings trade unless they're really consistent with
Yeah.
the price action afterwards. Now, if you're not going to play that game, because I don't think that you necessarily need to. It's a very difficult game because there's no free lunch. The options are really expensive for most names, especially in the tech and the growth space. So, you do have to get more right, in that sense, or at least structure the option trade so that you've got a good risk to reward. But I kind of I think what will set up is if a name has really beaten its earnings, it may set up for like the next weeks to next in terms of the next quarter. They may become a market leader after that.
Right.
So, in terms of what we see here, for example, the volume on earnings day, and you could see the volume afterwards. Now, this isn't a great example of a runner, and I'm trying to think of one off the top of my head, but you will see, moves for a number of days and then kind of a settle back in here, which was really nice. Like this was a situation where it did kind of rest for a little while, and you saw declining volume as you go along, and notice that it held the earnings gap. And then it made a nice turn, right? We see price get back above the moving averages. You could see that volume kind of increased a little bit on this move, but this is more accumulation. And this name, Arista Networks, is actually, it did pull back, a bit from here, but it's actually not looking too badly here, as it kind of sets up around the 50-day moving average, making a little bit of a lower high here. One of the things that you did ask me to, because I want to make sure I answer all your questions, win and loss ratio. This is something that I talk about quite a lot. You don't need to have like a 70 or 80% win ratio. You just need to be able to you could have 50-50. And as long as you're cutting your losers very quickly. So that's becomes difficult too, because I find that sometimes, and I just did this a trade the other day. I just did this yesterday, just because of the market environment that we've been in for the last week. But if you get stopped out in a trade, which I got stopped out in Morgan Stanley yesterday, right? Which I think, just kind of looking at a current trend going on here, very sideways, but you could see it's leaning higher. You asked me about my time frames. I look at the weekly chart a lot. I know that you posted, you had a nice post the other day on weekly charts, but they really kind of strip out the noise, right? If you look at this daily chart, it's like, oh, geez, all over the place, right? But it really kind of helps you see the picture a little bit clearer and the trend to know that Morgan Stanley right now, and this is a bad example because it's got earnings coming up. It's got earnings next week, is it? But
yeah, I'm not sure either.
But you had a really nice move here and really nice trend. And I think it's realistic to see a name go sideways for a couple of months after it's had a big run up. And I think one of the, a very bullish thing that could happen here, it hasn't happened yet, but it's leaning that way, is for this name to kind of come out of this consolidation and resume its trend. This is a value area, which we'll get into in a second, but you could see this is the value area for the whole year, right? So this is volume at price. And what we're looking at is some statistically significant levels that I'm looking for this to get above, which it is now 105.26, but we're on the weekly bar. So I'd like to see a close above here by Friday, and it looks like it's resolving its trend higher. But bottom line is that if you get shaken out of a trade, you got to get over it quickly, right? Because I thought, this name's not exactly setting up the way I wanted to. Yesterday, if we go back to yesterday, where it looked like the bottom was falling out again yesterday, and then all of a sudden we flipped around, and since then we've been going higher. But right in here, I got very close to my stop price and just decided to take it off for the day. I just really didn't want to see any more pain, in terms of too many names that were kind of misleading over the last week. So this was one that I took off very quickly. So losing percentage, but, like kind of more of, what's the term I'm looking for? you know,
Uh,
a very like a small cut, right? In terms
yeah,
of, not anything harming in terms of P
a
and
paper
L.
cut.
Paper cut. Thank you.
Yeah, there you go.
It's been a long day. It's already been a long week.
Yeah,
But so paper cut losses, you'll see me. I will incur those all the time, to make sure that I'm in the trade the right direction. I also like trades to kind of get off to a good start. So if you
right.
just get into a trade and it starts to kind of break down the other way, you'll find I'll just cut it and I'll just watch. What is important in that situation is to replace your alert that originally probably triggered for you, and then just go right back into it and try again, try again. I've done that sometimes with names 2 or 3 times, because they just may not get going, or the market is just too volatile, and eventually it will kind of do what you thought it would do. But you got to continue to monitor. So monitoring, taking a stop here and there, or whenever it's fit to, but making sure that you go back and you monitor. One of
Right.
the things that could happen with traders sometimes is that you get discouraged. You're like, oh, geez, I don't want to look at this name again. I lost some money on it. I'm going to look at something else. Well, stay with it. It just may have not been the right day.
Yeah, I think it was maybe Paul Tudor Jones who was quoted somewhere about his best trade ever. He was stopped out 5, 6 times before it fully worked out for him.
Triggered,
So
yeah.
yeah, yeah, and yeah, I think that's something that I've dealt with in the past and still do to an extent. Is you get stopped out a few times and you take it off your screen, and then it works the next setup. So you always got to be ready and try to stay vigilant and don't have a bias against a stock, I guess. I think
Yeah,
that's super important.
just try to keep the emotion in check, and not get discouraged. But I'll tell you that, I'll go back again to the alerts. You got to just go back, and as soon as you get out of the trade, put an alert back. You don't even, if you're upset by the trade, that's fine. You
Yeah,
don't have to look at it again, because you got your alert there. And then when it triggers again, half the time, if you let a couple hours go by, a day or two, whatever, you forgot the whole reason why you were upset in the first place. So.
exactly. And Christian, I'd love to just kind of go through your overall chart layout and maybe talk through a bunch of the different indicators you use, and also in what circumstances you use them as well.
Yeah, definitely. So why don't we go to an S&P chart, and then we'll go back to a couple of charts like this. But
Perfect.
um, I love to have the moving averages I have on my charts. They really just kind of give me an idea of the trend. So we'll start with the moving averages, and then we'll get to the market web's value areas in just a second. But what helps me is, like, so this line here, which is thicker, right, which is the 200-day moving average. We really haven't had to worry about that, knock on wood, in the for the S&P and the overall market, because the 200-day moving average has been down here. Maybe at some point we will, but for the S&P, which has been a bit stronger, we're decently still above there. 50-day moving average, right, is the next one, right, the next slowest one, and that kind of will just tell me, overall. And I think most stocks, the 50-day moving average at this point is going to be really good in terms of trend trading. You want to see the price, very simply put, you want to see the price stay above the 50-day moving average. You could have these checkbacks like we've had in the S&P, but, and this was kind of a nice kick save, pretty decent kick save yesterday in the S&P, but you want to see the price action stay above the 50-day moving average. Like I said, with all this stuff that happened last year, if you were just, stayed away from names that were below, once they broke the 50-day moving average, you miss the pain. You miss all
Right.
this stuff that's happening down here, right? So it's very important is the 50-day moving average. Again, depending on this, how what your frequency of trading is. If you are, a short-term swing trader, definitely the 20-day moving average, right? You want to make sure that this is trending up, especially when we do something like this, right? It's good to just check on what the shorter term trend is doing, right?
Hmm.
So I think that's an important one. When the market is really trending, when something is really strong, you will see it stay above the 20-day moving average. Also, when a name will kind of come in, I think I was showing, we can even show Asan, which was a great stock last year. But notice that this thing, right? It didn't get down to the 50-day moving average many times. It only got down to the 20-day moving average. So even right here on earnings, which was, by the way, a good example of an earnings name,
Right.
gapped up, and you could see all the volume that happened here. This was, institutions or even retail, accumulating the stock because they had new information. They beat earnings. They kind of came in a little bit, broke a little bit below the 20-day moving average, and then just continued. And if you were hanging on to this, if you use the 20-day moving average as your stop, you could stay in this stock for a decent while. So very simple. And then just going back, because I always start with the S&P chart, if you haven't been able to figure that out yet, but I always kind of look to see what is going on in the trend in the S&P. But I use the 5-day moving average a lot to say when we start to trend like this, and it's nice over the last couple of years, we've had situations where the price will get above the 5-period moving average and everybody wants to take profits. They're like, hey, this has gone too far. Nope. If you just watch the 5-day moving average, the price will stay above the 5-day moving average. And it's a great thing because that means the market is really trending. So the best thing, in my opinion, that you could do here is just wait it out, stick with the trend until it's not. And that 5-day moving average is really, really important. On the flip side of that, right, we go back to what happened in the beginning of 2020, right? Once notice that how the 5-day moving average helped on the downside. I had so many people telling me, buy the dip, buy the dip, buy the dip. Well, price was never, except for this little, this was a fake out. And I actually remember I lost money on a couple trades on this fake out. It's fine. I stopped myself out and just kind of just waited it out. And I said, I'm going to watch until price gets above the 5-period moving average, right? So it stayed above here. Once it kind of bottomed in here, we had something to work with. We started to do something different and we were building right around in here. Right. Notice that the price also stayed above the 20-day moving average. I had a whole bunch of people telling me all over the place that you heard on the media, oh, we're going to retest the lows. We have to retest the lows. We never even came close to that. Price never broke the 20-day moving average. So people who are forecasting, oh, we have to retest the lows, they were so incorrect with that prediction. But I had the secret sauce right in front of me, just the 20-day moving average. 5-day moving average, because price stayed and honored that. You didn't need to overthink it, right, about what was happening. And I'll tell you, hindsight 2020, everybody, did what seemed to have kind of make it through here. And there was a lot of trades that revealed themselves. But, making those predictions was not a good thing to be doing versus just following the price action. Back in here, I remember everybody was doubting it, saying, hey, this should not be happening, right? The economy isn't doing that well. But the price action just told you to stay in there and hang in there. Just simply, 5-day moving average and the 20 once we got back above it. All right. Perfect. So that really kind of comes into play once we kind of break above value. So let me get to the value areas and why they're so crucial and why I use them so much, in my trading. It really just basically tells me when something is choppy versus when we're starting to be in price discovery. It really helps too, if we go into like the S&P from yesterday, right? There was a level that we took out yesterday to the downside. So what are these things, right? What's going on here? So I do use, going back, and I think this was one of your earlier questions, and I'll try to properly answer it a little bit better. Was that what time frames am I using? I am looking at the weekly chart because it clears up the noise. The daily chart, probably where I spend the most amount of time on, but I really want to see how things start to look and how the trend changes in the short term. That's the 1-hour chart, right? So I mentioned volume at price and using a value area. So this value area, right? Because I'm on the 1-hour chart. This is based on last week's price action, right? So this volume profile that you see shaded in here, when we put roughly around one standard deviation around that volume at price, you'll come up with significant levels, right? And when you look at the previous levels, notice how, so this was a big thing, this is good progress to see us get back inside value for the week, right? We started the week below value. We kind of came back in here and fought with it. This was another big one last week. Last week, I really didn't have a good sense, starting the year. We heard things about, all kinds of things like the Santa Claus rally and, all those types of seasonal things. Notice how slim the value area was last week, right? So usually that means that a big move is coming, right?
Mm-hmm.
When you've got price, when you've got volume and price that is that narrow, you could break this value area very easily. And once we broke it, right, we had a little bit of a test here. We came back, we kind of had a brief move above value, but you could tell that something was going on here. And that once we broke this thing with decent value, we began to be back into price discovery, but to the downside. Right? We really didn't have anything to kind of hold on to here. We didn't have any major support. So we just kind of kept on drifting lower and lower. We got to this week and we price will kind of search out areas where there's been a very high level of volume previously. That volume hasn't passed through. So notice that a couple of weeks ago, price was above this value area, and that the price didn't even forget about even passing through the point of control, which is where the most volume is for that period. Notice that the price did not pass through this at all. That will always leave what's called a so point of control. Red line is virgin point of control, right? So that is where price is not revisited. So notice how we kind of gravitated down here, searched out that high volume area, and then we're able to we definitely went a little bit further past it, but then we kind of moved back. So it's almost like checking a box in terms of, hey, we're moving down. Where could this possibly turn around? Or where could price get to? So if you're shorting, in this situation, you'll probably say, hey, I'm going to find an area where there's a lot of volume, and per chance, this might be where buyers kind of come back and step back in, right? We also saw this, if you go to the NASDAQ, right? We also saw this here, right? Again, we went a little bit further because there was a couple of these things, and it depends on volume, right? If volume is really strong for that day, it'll push price past this, right? But a lot of times if the selling has gotten exhausted, then this is a great turnaround spot, right? But again, you kind of have to have that in the back of your mind that, this might have been an extreme enough move for us to move back. I'll just give you one more example and then we'll move on. But bonds have been an interesting one too. When we look at that's obviously kind of one of the fundamental reasons why we've seen that type of move in the growth stocks, right? Notice that we took 3 of these things away. We actually drifted a little bit further down, just like before, but we kind of, this was an area that I would say a potential area of reversal. Notice that we're actually coming back to it at this point. So we did go further, no doubt. But we're starting to move back. But you will see these a lot on earnings. It'll be really interesting, because you could see these up here, for example. Now this is bonds; it's not a stock. But when something crazy goes on, you will see price kind of come up and tag these levels and back off. I'll just give you one more example. GameStop from last week. Remember last week they were saying that they were going to get involved in
NFTs.
Yeah, the NFT. So it went right up to that virgin point of control. It didn't have the strength to take that second one out at 180. But, these are great places to say, like, if you want to fade the trade, right? Well, it's, it moved up on a headline, look at it, give it all back right after that. It had to take out this level essentially. And once it did, it didn't stick around there for long.
Right. And do you incorporate any volume weighted average price or anchored VWAPs into your process? Because that's kind of a similar concept to the volume profiles.
Yeah, I don't. I used to trade with that algorithm a lot, the VWAP algorithm in my institutional trading days. So I've got a pretty good understanding of it. I think I understand the differences between the moving averages and the volume weighted average price. But when you're incorporating, it's a little bit of a crossover between using the value areas, because they're looking at some of the same things that a volume weighted average price will look at,
Right.
right?
Right.
We are of course looking at price, and we are looking at volume, and we are looking at time. Right. Those are the three things that make up the value areas: is the time, of course, the price, and that volume. And that's why it's so significant. So when you look at some places, depending on where you anchor your price on the VWAP, but you will find that oftentimes there will be a lot of crossover
Right.
between turnaround pivots or points, or things checking back to a support area, which could be the volume weighted average price, or it could be the bottom of value, right? On
Right.
on my charts, where things might actually find a rebound point. I love things like, so one of the ways that I trade too, so you could see like the CF Industries, right? So this is kind of, right in terms of what we're seeing right now, more um, commodity type plays. This is an agriculture name, but take a look at what this is doing, right? So
Mm-hmm.
it's breakout, check back, and see how it's holding the significance of the top of value 67.62. So
Mm-hmm.
I'm not sure if I don't have a position on in this one. I was tempted to take a trade in this one at the end of the day, but when I also overlay this with the 1 hour time frame, I've got to see this thing kind of complete the turn and get
Mm-hmm.
above 69.30, right? That kind of clinches it for me, because I looked at this trade last week too, and notice how it stalled at right where it was supposed, right where it's supposed to turn for a move higher. It stalled right at the bottom of value. It's doing the exact same thing. Now I probably want to wait for it this time. And because I think the previous week, I think I tried a trade. I'm like, it's going to do it, and again, it's important that you let these bars close, right? So
Yeah.
if you're on the 1 hour bar, of course, it's going to take an hour, which could be a very long time in trading, to sit on your hands and to watch for, a bar to close. But lo and behold, it did not close in value.
Absolutely. And I'd love to ask you just kind of how you're interpreting the recent price action in both the market and also kind of leading names as well, and any names outside of CF, obviously, that you're kind of watching at this point.
Yeah, so definitely. Okay, so how I'm interpreting this market right now? Well, I think, we're obviously watching it evolve.
Mm-hmm.
Um, when we look at this weekly chart and how we started the year, it's, we want to be in price discovery, right? We
Mm-hmm.
want to be above 47.32 in the S&P, right? Now we're not very far away from that, so I'm kind of letting this market kind of, give it a chance to see if we can actually at some point break higher, right? If you look at where we started last year, there wasn't even a doubt, right? In terms of, because I don't want to be in the middle of the range, right?
Mm-hmm.
I don't want to be falling into value. So 47.32.75 would get, if we price gets above there, that gets me a lot more, just feeling better about the overall market. NASDAQ, you could see, so this is NASDAQ futures, so the
Mm-hmm.
Qs, but looking at it from a futures perspective, we, again, we're on the weekly, right? So yesterday, this didn't look very good. It certainly didn't look good closing where it did last week, but if we could close back above, it's very constructive, right, for that to take place. And then if you want to look at the the really difficult one,
The
which
Russell,
I
yeah.
view IWM as not even worth even look at, not worth trading, looking
Yeah.
at in terms of what's going on, that's fine. But, it's hanging on by a thread, right? It's got to stay above 214.39. Again, look at the size, the narrowness of this value area for this year, right? So certainly it's because of this volume and the range that we were in last year, but we could really get a big move in small caps if this thing breaks 214.39, and not so much in a good way.
Yeah.
Um, on the other side, we could really kind of get back up to 228.74. No, and no problem. Am I going to predict which way it's going to go? No. Am I going to say it's a beautiful setup? No, this is a horrible setup until it really starts to kind of move away. So what do you do if you want to play this, right? You just wait and you realize that there's so many other things to play than, trying to guess. And I get it. I think one of the things that we do sometimes in our analysis is we want to be the first one, or we want to try to be right. I don't
Right.
really care about being right in this thing, but I'll know which way to trade it. If it starts to break above value or break below. Until it does, unless, I guess selling premium was probably the trade of the year last year in this thing. But unless you're doing that, from a stock trading standpoint, there's nothing to do here.
Exactly. And are there any names that you're really focused on at this point that you're watching carefully for potential trades?
Yeah, and I think it's going to be, it's going to start to get a little bit difficult. Not that it hasn't been difficult, but
Yeah.
just in terms of stock trading with earnings coming up.
Right.
Taiwan Semiconductor, I think, is a really nice looking chart. It's not that expensive, right? So it's not as expensive as an NVIDIA or an AMD, which the market seems to really care about right now. So
Hmm.
again, kind of going with, that's the fundamental view, is that Taiwan Semiconductor makes an awful lot of chips. They should be in demand. They're a little bit cheaper than some of their counterparts. So that's the fundamental take. The technicals, look at what this thing did this year. It was a very, I remember some people trying this trade last year. By the way, here's a perfect version point of control takeout and
Hmm.
fade. So again, like,
Hmm.
sometimes it keeps me out of trades because I'm like, geez, there's a version point of control right here. I'm not going to take this thing unless it surpasses that. But that was a really tough fake out in the name. So it's looking very constructive on the daily and the weekly chart. Like I said, I think I mentioned with Morgan Stanley, nice trend. It's been going sideways.
Hmm.
Notice how it's also coiled up with those moving averages. But I love this thing if it just starts to trend, which we don't know, right? We don't know if it's going to start to trend, but it's a very constructive pattern, and I know exactly where I would get out.
Hmm.
Now that's a little bit farther of a stop that I would want to take, which is 123. And that's probably why we want to look at the daily chart a little bit more in detail. But that's the bigger picture, is the weekly. And then we kind of do our work a little bit more in detail on the daily and the 1 hour charts. But I think this has the makings of a really nice trade this year. We just need a little bit of volume, momentum. And you could see it's had some decent volume. Let's see what happens for just earnings
Yeah.
is just interfering with this whole thing right now.
Exactly. And but just in general, could you kind of walk me through your process in terms of what you would look for to actually place a trade, looking at different time frames, and also during that actual day, what are you looking for in terms of price and volume action?
Yeah, so let's zoom in here. So yeah, so the weekly chart is one of the first things that I'll look at and say, okay, we got something going on here.
Hmm.
Then of course what I'm doing is looking at, I'm drilling down to the daily chart, and what I'm looking for with these value areas is, you could see, for example, this is what, December, failure here, failure here. Now we kind of broke out here. So all of a
Hmm.
sudden, my eyes get big when this happens, right? We're above value. So for me, and it's on it's on good volume too.
Right.
So that to me is the signal that I'm looking for. If now what happened to me, because I traded this last week, and I'll give you the result of that in a second, but I had to chase a little bit on this day. Which I really wasn't fond of doing, considering how the market was acting last week. It had some follow through, and then it kind of completely collapsed a little bit. So
Right.
this is not bad, by the way, that it's coming back and retesting the breakout zone, and it's holding up very well. So I think right now is worthy of a trade. We actually went over this in our trading room earlier today, and I think it's setting up really well. You just have to worry about that earning. So I love the move. So the trigger for me is above value. The volume is nice. I don't always need to see it like a huge volume bar like that, but I like to see definitely some interest on the breakout, right? And then that's basically it. And then we're kind of looking, these are extensions away from the value area. Notice it did stall on the
Hmm.
second extension, but there's no reason why this can't excel and go higher. So, as long as it kind of stays above this 122.30 after earnings, this could be something that I would really look at trading, considering the sideways consolidation. Of course, I like to verify what's going on the 1 hour chart. You're going to see that we're going to have a little bit of resistance right? So depending on what your, what time frame trader you are, like this may have worked for a very nice day trade, right? So you
Hmm.
could use the 1 hour value areas to say, hey, move in, kind of retest bottom of value, nice little entry here, and maybe taking a final target for a shorter term trade, maybe before earnings, ultimately 130, but probably taking some profits along the way.
So basically, just to kind of summarize your process, just so I got it right,
Yep.
you first take a look at the weekly chart to see if it's setting up within a base, look for those moving averages to be coiled, and then you take it over to a daily and look for a break above the last week's kind of value area. Is that pretty much
Yeah, I mean,
how you do
it
it?
doesn't have to be like I'm just kind of giving you
Yeah,
a good
yeah,
example, but it doesn't have to be that cut and dry on the weekly chart. It doesn't have to be coiled or any of those things.
right,
It just has to look constructive,
right.
meaning I don't want to see resistance right in front of it. Like if we were, for example, right, if it was looking pretty good on the daily chart and I checked the weekly and we
Hmm.
had and the stock was here at 121, I'm like, well, we still got to get through resistance, right?
Right.
So I don't, if I see something that I don't like on the weekly chart, then I'll just set an alert and say, it's not ready for a trade yet. But ultimately, above value on all time frames, the weekly, the daily, and the 1 hour. That is really what I'm looking for. And again, you kind of have to make sure that it's not super extended,
Right.
on all those time frames. But what I'm looking for is a breakout on multiple time frames to keep it clean and simple. Um,
Perfect. And getting into it a little bit more, um, in terms of, let's see, I guess position sizing is something I'd love to cover because we haven't talked about that too much. You talked a little bit about concentration and diversification earlier, but what is kind of a typical position size for you when things are doing well? And yeah, basically, how do you kind of determine a position size for a particular setup?
yeah, so it definitely depends on the overall market conditions and
Right.
also I do look at like where the VIX is as well, but it's
Yeah.
basically 1 to 2% of capital, right, for position size. What I try to do and what I've kind of just learned over the years is that even if I really think the setup looks pretty good, like this was in Taiwan Semi, if I size it too big, if I don't leave myself room, right? So I
Hmm.
kind of go back and forth with position size. You'll see me saying in my trading room, like depending on the time of day that I'm trading, like if the beginning of the day is very difficult right now to take
Yeah.
trades, like the first 15 minutes. So if I'm ever going to take something in the first 5 or 10 minutes of the day that I'm looking for a swing trade, it's always going to be a starter position, right? So I'm going to start and kind of leg in with maybe like an eighth of a position of that, right? And say, okay, is the market looking okay? Is this starting to look pretty decent? Because we've seen this over and over the last month where a name will look great in the first 15 minutes and then give it all back. So
Right.
you got to be careful with like, I don't want to use like my full position size in that first 15 minutes. I'm actually more inclined to put on a little bit more risk in the last hour of the day. I fully believe, and there's evidence over this that the majority of the gains are made in the overnight market. So if you're in options, for example, if you decide to trade the name in options, you have to be selling in the first 15 minutes, in my opinion, right? The market makers are going to give you better prices in the first
Hmm.
15 minutes as the day wears on, right? That volatility will come in, right? So, again, making sure, and that was a big product, I think, of 2020, partially 2021 as well, where you could put on those trades at the end of the day and then come, the first 15 minutes, take off half your position size and then leave that, last portion of the trade on to see if it continues to kind of get better through the session. But if you did that over and over, um, it was just a very easy way to kind of make money, in a name like an INMD or an Asana, right? You could
Hmm.
do that trade over and over and over for a couple months, and just balancing that. But yeah, so the portion of the day is important, um, and right now it's more important than anything else because we are just seeing very whippy prices. So you have to find something that's really kind of comfortable with you. And I I do mess around with that position size. I mean, generally it's never going to be something like 5% of my capital or something like that. It's usually going to be 1, 2, or 3% somewhere in there, depending on the move. Now, if it's also something like I do play with the sector, the sector ETFs,
Right.
there I could take a little bit bigger of a position too, because you're limiting some of your risk there, right? You're diversifying away from that single stock risk, right? We've all been there before where we're in a name and then, the next day somebody downgrades your name, right? And then your trade is kind of shot. If you're in the sector ETF, you might fare a little bit better than that. So you're going to need a little bit more position size because they're not going to be quite as volatile as the individual name for the most part.
Makes sense. So if you're taking around 2 to 3% positions, how many total positions do you have on at any given time?
Yeah. So again, definitely a function of the market, and and
Right.
that's why I mentioned analyzing what the S&P is doing, if we're trending, if we're chopping around, if we're moving more to the downside. I will go from time to time, down very close to down zero positions, and that happens to me over and over. If we start to kind of break the 50-day moving average, you will find me doing less and less of trying to pick when this thing's going to turn around. I would rather be
Hmm.
a little bit late than be in sustained moves like this. This is very painful when this happened after August. We essentially were, did very similar what we did 2021 versus what we did in 2020, right? In a couple of these months, we try to rally back a little bit and kind of failed and fell apart a little bit. But when I'm really trading well, you will find me say, okay, I've got to cut my positions even a little bit, even a little bit late, just so that I don't get caught in some of these big red candles.
Right.
And then I'll try to basically day trade in here a little bit and just wait for the trend to kind of resume. Right. I know that's easier said than done, but it happens. And there'll be one day, and I'll talk about this a lot, where I'll say, hey, I don't mind being down one day. I don't want to be down for the whole week.
Right.
Right. That's a big difference to me. Being down one day is no problem when you look at when you look at even, if you look at a month and how it's going to play out, right? A week, when you've got a whole week wrong, then it's going to, you've inflicted a little bit more damage on you. So one day, even if it's a bad one day, it's really not a big thing in the grand scheme of things. So going back to your question as a roundabout way to kind of answer that, I'll go down from close to zero positions. And when I think the market is doing really well, I may have, 15 to 20 positions on.
Hmm.
And those will range in size. I usually have, a couple, like, in that sense, when I'm up to 15 or 20 positions, I'll usually have 5 positions on that are kind of the equivalent of a starter position that I
Hmm.
think are acting pretty well, but they may be very volatile names. So I'm not going to get a big position size on. And then really out of those 15, 20 positions, there's probably 5 that are going to kind of be the core positions that I'm going to pay more and more attention to.
Perfect. And I actually wanted to ask you this earlier, but I'd love to cover kind of both your weekly and daily routines and see kind of how you set yourself up for success the next week and kind of hear about your process with that. So starting with your weekly routine, what do you do to go about analyzing the market, determining ideas for next week, and yeah, basically sorting through all of that?
Yeah, I do a lot of market. Well, sorry, I do a lot of research while the market is closed.
Yeah.
I find that number one, when things are not moving around, you could just think a little bit more clearly and calmly, and you could really think a little bit more objectively. So I'll go through. I use FinViz a lot to scan for trades. I'll go through and I'll look at everything from, I'll do this probably twice a week. If I really have if I'm really doing a lot of analysis, then it's 3 times a week. I'm looking at like the 20-day new high list,
Hmm.
right? And that will just basically give me a sense of what are the areas that are showing the biggest strength. and I'll look at that in terms of could be the 20-day high list, and it could be any names that are over $20. I'll put in like some volume contingency in there too of like needs to trade at least 100,000 shares. It depends on what kind of market we're in. You don't want to be combing through 80 pages, right, on in FinViz. And if the market is doing really well, you're going to find that there's like 80 pages. Right now, what we saw over the last couple weeks, you'll go through and it may only be like 15 to 20 pages, right? Because there's just not a lot of participation in the market, right? We did that when we were going through, over the past couple of weeks. You just found a lot of defensive names. Wow, it's every consumer staples name, or it's every healthcare name, right? Or utilities, but it'll flip around. We're seeing, energy has been very strong the last couple of days. We're going to, of course, look at a couple of those charts too, but that's kind of a starting point. Another starting point is to look. I have one scan that will just look at the overall sectors, to just kind of help you see, as well as besides looking at the new high list, but just what sectors are showing the strength. I put that together every week for my members, just showing, hey, what are the strongest sectors right now? Which are the ones that are gathering some strength? Which are the ones that are going sideways? And which are the ones that are the weakest, right? That just gives you like a really good picture, snapshot of like how things look. From there, then I've got like a number of just personal watch lists. Like I love to have watch lists for each sector, right? So for example, if I'm seeing strength in the healthcare names, right? When I go through all the names in that sector ETF, which is XLV, right? I want to be saying those names should be jumping off the page to me in terms of setups. Like if the ETF looks pretty good, it should be confirmed by the individual names. I saw this as an example, right? ITB, looked like it was just a week ago showing that it might be on breakout watch. I went through all the ITB components. I didn't like any of the individual names. I'm like, that's really weird. It's odd for me to see a name that's, just about to be, either testing highs, breaking out like it was last week. And I was like, I can't find one setup that I really like in the home builders. So again, these things they give you hints, right? And if you go through, one group, I think like industrials are really interesting right now, definitely energy. But if you're seeing like 5 or 6 setups, once you go through the individual names and then ETF in energy, that it's not only you got strength and now it is the components of the ETF, but it's just confirmation that things are, maybe the trend isn't really complete yet. If you're seeing more names just start to kind of break out of consolidation, you might kind of catch on that there may be some legs to go in the sector. So that's a big thing for me. And then I've got my earnings gap names. That was huge. I think a couple quarters ago, the earnings names that beat earnings, they just kept on going. So that was a great trade. I did the same thing for the fourth quarter, after the last earnings cycle, and it was few and far between. We just didn't get a lot of runners. So, again, the game changes, right? Sometimes that'll happen where it's one earnings quarter and, I guess funds were kind of caught off guard and a bunch of names that they wanted to reposition in. Previous quarter, we saw a lot more gap ups and they were taking profits into that. So it was different, right? Last quarter.
Yeah. Hopefully this earnings, basically this time around with earnings, hopefully we get some turnaround stories and see some new opportunities. I think that would be great.
Yeah, it's going to be, no doubt, it's going to be a very interesting earnings cycle.
For sure. And when it comes to your daily routine now, what do you do on a daily basis to make sure you're ready for the next trading day?
Yeah, so it's so that's of course while the markets close and over the weekend, which I do a lot of work on the weekend. As we kind of get ready for the trading session, it's going to be, I'm still going to kind of run through a couple watch lists if I haven't completed that from the night before. But it's going to be going through all my open positions and going through and just checking one by one. I want to make sure I've got an alert out to the up. I always will make sure that, we don't know what's going to happen in the first 15 minutes. I
Right.
love to be like a lucky seller in the first 10 minutes, especially the way that I keep saying the way that this market has been going. But we've seen a number of first 10-minute moves, and then the market reverses and goes lower. So if you could take that first target of a trade and get that out of the way, it's going to improve your cost basis so much. Sometimes you will find me, if the market's really going sideways, I'll even take a really small first target just so that I'm locking some profits in case the market deteriorates, like we kind of saw it, in various different days over the last month or so. So that's a big step in the process. And then any trades that I'm looking for, right, that I think are a good setup, I'm constantly placing, alerts on some of those names. So something like for tomorrow, like if I want to see that there's continuation in Morgan Stanley, just because you're not going to catch all these names, as they happen. So, maybe putting an alert at 106, just something to kind of keep me ahead, give me a heads up that this name is running and it's got further strength. Certain names like Tesla, right? Some of the more liquid names, right? That, we don't know if it's really, this name seems to be kind of bogged down a little bit, but I'll still, we see so much option activity in this name. It's ridiculous. But, something like this, so I'll actually look at the 5-minute value area. So that's just for the day. So this 5-minute value area that we see right now for Tesla is based on today's price action. So what I would be doing if I'm looking to play it on the long side is putting an alert right around 1067, right? And if I get the alert, then I'm going to start looking at this and see what's going on. And then I'll kind of draw on my analysis and say, okay, 1070, do we have any more resistance, that's nearby, right? Because I don't want to take a trade if we've got resistance right ahead of it. But if I think there's an open field a little bit, even though this is way in big value area for this week, because of last week's price action was crazy last week in Tesla, that you may not find that Tesla does too much this week just because it's in value and the range is just too large, right? So it may need another week to kind of set up. But yeah, that's it. And just, keeping an open mind. This name is not a name that I played that much, but, look at it, act differently, right? So Lucid is a name that I'm really interested in right now because number one, it's doing some of the things that we talked about. It's breaking value for the month, right? And it's now in a little bit of price discovery. It's going to have to battle with, some overhead stuff, but it's now in price discovery for the month. Notice how the 50-day moving average is coinciding with that top of value. So it's, to me, significant that it's doing something different. The other thing that if you notice too is last week, this name really didn't get beat up last week. So What do we call that?
Relative strength. There you
go. So yeah, I'm all about relative. It's amazing. We've talked now for a while and I haven't mentioned relative strength, but relative strength is a huge thing for me. And if, that's to me is very telling that this name had, it kind of flinched a little bit in here. Notice this bar did not close below value, very strong, right? That it confirmed that it wanted to stay in this range. So going sideways while the rest of the market went down, especially high growth, tells me that we may be onto something here in Lucid, and I would be shooting for this VPOC target up at 5150.
Perfect. And one other thing that I wanted to ask you about is when it comes to looking at a stock like Lucid, how much do you care about the overall strength of the entire group? Because we've also got kind of F working, Tesla kind of chopping around as we mentioned, but is that something you really focus on? You mentioned going through the ETFs and looking for multiple setups. What are you kind of looking for in terms of an overall group move?
Yeah, I think it's good when the sector is behind it, right? Like I would be less inclined to play this if we saw Tesla down 3%. Rivian's doing something different a little bit. That seems to be the one that's out of favor. But if the rest of the group is like, if there's some momentum to it, sure, that means that there's demand within the group, and then you can kind of go within the group and look for that relative strength. Always relative strength, not relative weakness. I find that you'll see traders do that too. You'll see a whole group moving, and they'll say, okay, well, which one hasn't gone yet? It's not always the case. The one that hasn't gone is the one there's a reason why it hasn't gone, right? It's because there's a problem with it, right? It's not on discount, right? The one that usually makes the strongest move is the leader, right? And the rest of them are going to follow the leader, right? You want to stick, in my opinion, with the one that is, doing something different. Just like this one, I think very good considering that, high growth was getting hit last week.
Perfect. Christian, I just to kind of have one last question, kind of my wrap up question. Would you
Sure.
mind stopping your sharing just so we
Yeah.
get back to that? And is there anything else you wanted to cover when it comes to charting? We went through a lot of good stuff, I think.
Oh, that was it. So the one question I asked you was about your market cap. What's your goal? What are you looking to, be with one of those market wizards? Is that your goal, to be a market wizard, or are you, more on the production side where you want to just continue to kind of, put out these awesome market chats and so on and so forth, or is it a little bit of combination?
I think it's definitely a combination. Obviously, I'm pretty new in my trading journey, but I really enjoy it and I find it really, really a challenge. And I've kind of got a sports background, baseball, soccer, that type of thing, and it kind of scratches that same itch, as they say. And yeah, I think trading is something that's really fun. You have to be really disciplined, and that appeals to me a lot. But also teaching through YouTube, Traderline as well. I find a lot of meaning in that, and it's so cool to be able to help out people and see them be successful. And these YouTube videos, especially these market chats, it's so great to be able to chat with people who've been doing this for decades and pick their brains on any topic I want. And yeah, it's a lot of fun. I think you asked before we start recording whether you think this has kind of helped me out. I think it's helped me out immensely. I mean, I kind of get a crash course into everybody's style, and I can pick and choose different things, different strategies that I think would help me out, and try different things. I've interviewed people like Jim Ropel, who are a lot kind of more classic position trader, I would say, where they're kind of approaching things a little bit slower than someone like Oliver Kell, who's more of the swing trading mindset. So it's really cool to see everybody's different styles, but also, as we've talked about, kind of find those similarities that they share, and those kind of fundamentals that you have to master to become successful in any style of trading: risk management, identifying good setups, entry points, stops, all that. So yeah, I guess my answer would be a little bit of a combination of both. I find both are a challenge in different ways, and I enjoy them both. So yeah, it's been fun doing it so far, and I hope I can continue to do so for the next 5-10 years, however long. So it should be fun.
Yeah, I mean, one of the things that I picked up too is that you're a great listener, right?
Thank you.
And that's a big thing. If you want to learn and get better at something, listening to what people say, and that's one thing that in each one of your market chats is that you ask great questions, and you're also just listening and learning, and that's a huge advantage, I think, that you have. And I would assume that you're not in the contest this year, but maybe next year.
Maybe soon. Maybe soon. I gotta refine some things, fix some mistakes, but I'd love to do it sometime soon for sure.
Awesome.
Yeah. And Christian, I'd love to just kind of wrap up with one last question I always love to ask, and that's basically for any new traders out there, what advice you have if they're kind of struggling, trying to find a system that works for them. What general advice would you have to kind of help push them in the right direction?
Yeah, a couple of things. I would say, number one, it takes time to get experience. And I think if you're in there and you're in the game and you're experimenting and you're competing and you're learning, that's the main thing that you want to kind of take away from the first couple of years of what you're doing. I know there's a focus on everybody wants to make money and so forth. That will come. Don't beat yourself up. The main thing too is to, as each person that you interview, we all have some type of different system. You have to get comfortable with what works for you. Your personality is going to be so much different than probably anybody else that you listen to. So to think that you're going to copy or just follow trades, that's not a long-term success plan, right?
Right.
To kind of understand what the setup looks like and how to kind of position in it and to learn different things from people's systems. Absolutely. But you're just not going to copy someone's system verbatim. You've got to figure out what is comfortable and what you feel confident in. Eventually, you'll get to a point where a light bulb goes off and you'll be like, hey, this felt really good to me. It's kind of like a golf swing, right? And I love to bring in sports analogies. But and I'm not a good golfer at all. But I know when I've had that really good swing, when you do everything fundamentally, right, and you strike the ball and it's perfect, right, and the ball, it seems so easy. And the ball just pops off the club and like onto the green, right? You know that you've done everything great. So you just what's nice in trading is that you can continue to be patient and just wait for those setups, but you want to have those nice clean setups. And you realize in golf too, not every swing is going to be perfect, but you could really kind of focus on what you feel comfortable with and then only decide to take those setups that feel really good to you.
Absolutely. To use another sports analogy, it's like you're playing baseball and you can let the pitcher throw as many balls as you want, and you only have to swing at the ones that are right in your sweet spot. Fastball right down the middle. You could just wait and wait and wait until they do that. So
and wait for your pitch. Yep, absolutely.
Exactly. Yeah, Christian, thanks so much. This has really been fantastic. I've really enjoyed kind of learning your style, which is definitely different than a lot of the traders who I've interviewed before with the volume profiles and VPOC. Yeah, I just want to kind of open it up to you because we haven't talked too much about the Tribeca Trade Group just yet. So I'd love to hear your thoughts on that. What are you doing, and where can people reach out to you if they want to learn more about your style?
Yeah, so going back to my background, like what I really wanted to create was, a really, nice community of traders that we're all basically helping one another succeed. So of course, I provide education and what I think of a chart and what the market is doing, and like we have CPI reporting tomorrow, so I give my perspective on those types of things. But really, I just enjoy trading with a group of traders, and I try to make sure I try to assemble a really strong community where we're all kind of try to help each other out and say, hey, did you see this setup? Hey, somebody's looking at Oxy. Well, what about this setup in energy? How does this look? Right. And at the end of the day, if we're all helping each other and kind of providing more information, and everybody's doing their own scans and so forth, it really just adds to the value, how valuable our trading community is. So that's what I do. And, we're around, I'm around all day, every day trading. This is my passion. I love to do it. As I mentioned, I do work on the weekends, which kind of cuts into some personal time sometime, but you have to really enjoy doing it and finding trends, which is really what I love to do, is to be able to kind of find something really interesting or uncover something really interesting that others are not onto. So that's what really kind of drives me and gets me excited about the markets.
Perfect. And if people want to learn more or reach out to you, what's the best place? Twitter, your website?
Yeah, they could either reach me at TribecaTradeGroup.com, or of course my Twitter handle at CFromhertz.
Perfect. And I'll have those links down below in the description. Well, once again, Christian, thank you so much for coming on and taking the time. To everybody watching, hope you enjoyed as well. If you did, please go ahead and leave a like down below and subscribe if you're new to the channel. And we'll be back later this year with many other great interviews like with Christian here. So thanks again for watching, and we'll see you guys in future videos. Thanks.